Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on August 28th, 2014, and we're going to look at the chart. But first I'm going to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I just remind you again, I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Okay, here is our chart as we left it after yesterday's close. I'm going to make one very small alteration to this chart. I've talked in the past about when you have a trend line that is defined by 2 points that are fairly close together, it's hard to extend that reliably, and when you get more data that comes to light, sometimes you'll want to make a small adjustment. And that's what I'm going to do with this bottom support line. It's defined by these 2 points back here that are only 2.5 days apart. But we have a span of about 8 days before we get to today. And if you look at what we saw today, we saw a gap down. Made perfect sense. I thought we would be down today. Then we saw a recovery. Then we saw a little slide. Interesting to note. If we take this line and just move it a hair, we end up with both of those being touches on that support line. I think that's probably right. If we had only had one touch, or if we hadn't had that gap down to that line, then I might not do that. But you see, all we give up here is, instead of looking at a chart in which we have a decent amount of inaccuracy potentially on support, if we move it here, then we only have that much inaccuracy back on the 15th. So let's do that. That also matches a little better with in parallel with the top line that we've been looking at for a while. So if we kind of line that up now against those tops, very, very close to being parallel. So what does all this mean? Well, we're under 2,000 again. If this line breaks, could very well, would not surprise me one bit if this line breaks. Then we're looking for support somewhere in the low to mid 1980s, or if that gives way, then possibly in with this line here in the 1970s. If this line breaks, and it moved a little bit on me there, let's go back to a 30-minute. If this line breaks and we end up coming down to the 1980s, then that would be a nice potential development for this potential larger inverted head and shoulders pattern, which, by the way, we now need to move this neckline. So our neckline goes to here. Potential neckline. Tell you what, I'm going to make that darker so it stands out a little bit. So what we could end up with, if things keep moving the way I think they will, left shoulder, head, right shoulder, and then a potential move to challenge 2100. But that is highly speculative, because not only do we not have a confirmed inverted head and shoulders pattern yet, we don't even have an unconfirmed one. We just have a dip and a bigger dip, but we've got the potential makings of and things in place that would seem to indicate room to make that right shoulder. So I'm keeping my fingers crossed that that is indeed what happens. You can see down here we had our inverted head and shoulders pattern. Sometimes you get a little nest of these things. So this was the head of possibly an even larger pattern. If you look at things like on a 3-minute chart, I think you can kind of see some resistance here, maybe thusly. If that's the case, and this is a good resistance line, we may not break this line. Could this be another case where we see one of our little truncated right shoulders? We haven't seen one of those in a while. This one was a little bit smaller than the left shoulder, but I'm not so convinced that that is the case. We'll keep that on the chart just in case, because it is interesting to keep an eye on. But the idea here is looking for support in the 1980s or 1970s, then looking for another challenge of this rising resistance line right here. That, upon breaking, would confirm the inverted head and shoulders pattern and give us that nice target. Now, it would be slightly over 2100. So guys, keep your fingers crossed. I am. Today, also, if you're a bear and you're looking for bearish things on the 2-minute chart, we did have a small rising wedge which broke down, but not in catastrophic fashion. So that would, if we trust this little pattern, then we would expect to move to get back down to the 1990s. So it's a little conflicting signals here when we look at the 2-minute chart. So with that in mind, let's keep our focus here on the bigger picture, which is the potential for a nice bullish pattern maybe under development right now. I think we look for that until we see it break down into something that's clearly not that. And frankly, that would take getting back down and to really bust this pattern up. I think we would need to be seeing a move underneath this red trend line right here. So, you know, if we start taking out support, then we'll start considering those things. But right now, we've seen so many of these inverted head and shoulders patterns, it just seems to make sense to keep an eye on this pattern for that distinct possibility. So that's it for August 28th. Thank you for your time, and thanks for watching. Going to give my voice a rest now, see if it gets even better for the weekly review. Thanks and take care.